I do have one question. If anybody asks a question, are you going to ask it to me, or do
Yeah.
you need me? Okay.
Yeah, I can. And what's cool and the great part about this is that, you know, folks can ask questions on here, and they'll pop up. So I'll make sure that they pop up so you can see them, and then I can kind of reiterate that or share that with you. So
I'm thinking I wish I could set my hair.
I know, right? I know. I feel bad. All of our ladies, between their hair appointments and their nail appointments, this whole thing's kind of messed it all up a little bit, you know. But hi, guys. My name is Chris Channa. I'm one of your local senior care experts with Amy Conti here from Senior Source TV and SeniorSource.com. And today we have Toby Lynn with the mortgage firm. She's the branch manager at the mortgage firm here in Punta Gorda, Florida. And we're going to talk about mortgages. We're going to talk about reverse mortgages. I know both of those can kind of be applicable depending on whether or not you're looking for yourself, or you're looking for your mom, your dad, or you're thinking about your own future and stuff like that. So Toby, then I guess, or Toby, just go ahead and share with us maybe a little bit about yourself and who you guys are, and then we can dive a little bit deeper into this.
Okay, Chris. Well, I am the branch manager for the mortgage firm's location in Charlotte County. My office is in downtown Punta Gorda. And I have been doing this for 33 years. This is my 33rd year right now. And I originally got into the mortgage business in the early 80s because I was an investor at that time. And that was back in the day that rates were 17, 18%. And
I know it's crazy. Like so I was born in '88, and my dad was in the mortgage business as a child. Like, so I grew up in the industry, so it was so weird when I used to hear him talk about rates like 10, 12, 14%, 16%. Like it's some like and now it's I feel like we live in a totally different world, you know?
It is. I still have my first note for my first home at 17 5/8.
Wow. That is crazy. Boy, have things changed.
They have in many different ways.
Sure. Absolutely. Well, I guess, you know, like that being said too, I mean, you know, maybe, you know, we'll dive into the reverse mortgage side of it here in just a second, but just for folks today, you know, is the mortgage market been affected by COVID-19, or I mean, like what are you guys seeing right now, or what are you advising clients currently that might be in the process of purchasing a home?
Yeah, there have definitely been a lot of changes in the last couple weeks as we've realized what the unemployment rate, you know, is, the industry's affected. So from our standpoint, in general, minimum credit scores have gone up. We had been able to, just until maybe 2 weeks ago, been able to go down to a 580 credit score, which a lot of people go, oh my gosh, that's such a low score, bad credit and all that. But sometimes it's really not. Sometimes it could have to do with old medical collections that continue to show up every month on the report. So it doesn't mean that it's bad credit.
Right.
And you know, so we've moved up to a 620 for a minimum score. We are definitely having to look at the way we calculate income differently. If it is for an employed borrower that might be in even a potentially affected industry, COVID affected industry right now, we are doing, you know, just having to calculate differently. And we're also doing verifications of employment verbally the morning of closing for every closing.
Wow. So, gotcha. Yeah, it's got to be weird, like, you know, walking through this process. You know, I mean, I feel like everybody, you know, it doesn't matter who you are. Everyone had to make a shift here recently, so it's like it is one of those things that, you know, we all had to make adjustments. You know, I mean, like even in our assisted living facility, you know, everyone has to have PPE gear on when they walk in. Like, you know, we can't allow residents' families to come. There's a lot of things that make it tough, and you know, I look forward to the day where I don't know what the new normal looks like, but I look forward to getting back to something that is relatively normal. So
right. It's not all negative though. I mean, on the good side, rates are ridiculous. I locked somebody in earlier this morning at 3 3/8 on a 30-year fixed rate loan. And you know, I mean, so it's not all bad news. It's just different news.
Sure. So now that's fantastic. I mean, so 3 3/8 on a 30-year fixed.
Yeah.
Wow, that's amazing. Now have the down payment requirements gone up, or have they changed much? Or are they about the same as they were before?
You know what? You cut out for just a
Oh,
nanosecond. I heard
I didn't.
have something changed.
I didn't know if the down payment requirements, the minimum down payment requirements, had changed,
No,
or if those have remained the same.
no, those are still the same. VA loan, of course, is always 100%, but an FHA is 3.5%, remains the same, and conventional somebody can still get in for as little as 3% down. So nothing along that line has changed.
That's still, it's amazing.
Yeah.
It's hard to believe that you can borrow money at that rate for such a long period of time. So that's got to be refreshing to a lot of buyers, I'm sure. When you think about like just on this other side of it, because I know when we originally got together and stuff, we were looking forward to putting together this massive conference. We actually had like around 600 people that were that had signed up and were registered to come, and so I know there was a lot of people that we were going to be able to bring this information to, and not every single person that came was going to need this information that you were going to share, but there were going to be a lot of people that were coming that do have questions or do want to know more about reverse mortgages, and how they work. I think a lot of times it might just sound scary, or there might just be an unknown about reverse mortgages that make them maybe just people are hesitant to like learn about them. So I think education, knowledge is so important. It's much easier to make a decision on something when you're at least knowledgeable about it. And so I thought it might be helpful for you to maybe help us understand, what is a reverse mortgage? Who typically would qualify for a reverse mortgage, and how does it work if I do qualify? So feel free to lead the way.
Well, Chris, you would not qualify because you have to be 62 years of age for, for reverse mortgages. That's the first requirement. And so there's basically two types of mortgages. The mortgage that we know on a daily basis in the industry is referred to as a forward mortgage.
Okay, gotcha.
Versus the reverse mortgage. So it's forward and reverse. And a lot of people think that the reverse mortgage is for somebody that is desperate for money, desperate to get rid of their bills and not make a payment. It is just not that anymore. It is part of a financial plan. You can actually also purchase a home with a reverse mortgage. There's a formula that is used. It's just like an actuarial formula based on somebody's age.
Right.
Depends on the amount of equity they have to have in the home. So this can be used as a refinance of an existing home or as the purchase for a new home. So as a refinance, let's say somebody is mortgage free,
right,
but they need some cash flow, and not even just desperately need, because I really want to get away from that image, but just from enjoying life and doing what you want to do and whatever. They want to receive money because, look, equity in our homes is really awesome. If you have a fully paid home or you owe very little, well, what are you going to do with that money? That money's no good to you. That equity is no good to you unless you sell the home and you get the money. Otherwise, it's not doing anything. So the reverse mortgage allows somebody to have that equity doing something for them. It can be received in a monthly check. That would be the most common way the equity is received, is monthly disbursements. It can also be used as a one-time disbursement, but more than not, it's used as a monthly receipt. So the homeowner, we're taking an existing homeowner now, they can either maybe have a mortgage currently, and we want part of the reverse mortgage to pay off that mortgage and to also give them a monthly cash flow, maybe pay off other bills. So it can be used for a lot of different things. Some of the biggest myths about a reverse mortgage fall into the bank can make you sell your home. No, they can't. It's just like any other mortgage. You own the home, you have title to the home. It's your home, just like with a forward mortgage. They did make some improvements in this program a few years ago. So the improvements are for the benefit of the spouse of somebody that was the borrower. If they were the spouse at the time, they no longer have to move out of the home the way it used to be.
Right.
Excuse me, I've been talking all day.
Right. It's all right.
Not drinking enough water. I promise I don't have a fever or anything.
I know, it's so funny. We always, not any cough, a sniffle, a sneeze. Like, it's not, I don't have anything. It's not the COVID.
Right.
That's
right,
crazy.
exactly. Another really big improvement that was made is you can never be upside down on a reverse mortgage. So going back to 2007, 2008, 2009, when we had so many short sales, people were upside down in their values.
Yeah.
That can never happen anymore on a
now,
reverse
mortgage. Is that because of a protection that, bless you. And my allergies were like this morning. I was like, I had a little allergy attack. My sinuses were flaring up or something. But I understand. Was it in 2008? Did they come out with a cap, or was there like something that they did in order to prevent that from happening? From people.
It might have been 4 or 5 years ago that the changes were made to the reverse mortgage program. Yep. And back prior to that, if your balance had become greater than your value, you were short, just like a regular forward mortgage short sale. So that has been changed, and you can't owe more than 95%.
Okay, gotcha.
Of your value now.
So a lot of times when you set something like this up, do they determine like the number of years that, like, is it predetermined as far as like the number of years that it'll pay you back?
It's definitely a formula. So for instance, if somebody is 62, they're going to need more equity in their home than somebody that is 85.
Gotcha. So it's really, so the formula itself, or the algorithm, or whatever you put the information into, it'll help determine that for somebody, like what that looks like. And then, but typically, is there a cap? Like, is there a number? Like is it 10 years, or is it or is it adjustable depending on what the monthly cash flow is, or the monthly?
It depends on the structure. There's several different options for the homeowner to choose. If I go back to using this as a home purchase,
yeah.
Down here we have a great demographic to actually use this as a purchase. So let's say somebody's selling their home in Wisconsin, and I'm just totally pulling numbers out of the air here.
That's good. That's good.
Let's just say they ended up with $300,000 cash from the home, of the sale of their home. And let's say the new home they want to purchase is $350,000. Well, instead of using all that cash that they just earned from the sale of their home, maybe they would only have to use 150 or 160 of it. That would be the equity in the new home they're purchasing. They get to keep the rest of the money that they earned from their sale. They have no mortgage payments because it's a reverse mortgage.
Right.
They're responsible for taxes and insurance. So this is where I was saying it's also can be very widely used for estate planning as well.
Sure. Because I can imagine, like, I'm thinking like about some of our folks, and it's like, maybe those that we might be utilizing home care with, and if they're sitting there and they're barely getting by, struggling to make ends meet, paying for home care services, trying to live in their home and keep the costs up of it and stuff, but they have 80% or 90% of that home's equity tied up. It's just sitting in the home. Their balance on their mortgage may be very low. This could be an alternative to that person to help pay for care.
It's an excellent alternative.
Yeah.
And it's used widely for exactly, and this is where financial planning comes into effect, because let's say somebody doesn't have any type of long-term care insurance or any type of insurance that will pay for the in-home care. You would know much better than me, what's available as far as that goes. But let's say somebody doesn't have it. They want to stay in their home. They have a paid in full home or close to it. Sure. It is an outstanding way for them to be able to stay at home, not have a mortgage payment, and have the money available to pay for whatever type of care and medical services they need.
Quick question for you, because of, I think that's a great point that you bring up. Is paying, like, for instance, like in a situation like that, could you move out of your home, move into, like, say, assisted living, and then also get the reverse mortgage and rent it out, or do you have to live in it?
So you have to live. That's a good question.
Okay.
You have to live in the home that you have the reverse mortgage in.
Okay.
That is one of the things that will trigger it's time to sell the home and pay the mortgage back, is
Gotcha.
if that borrower vacates their home.
Okay.
Now, there are some other instances that, let's say the borrower does have to move out of their home, but they have a spouse that they were married to at the time that they got the mortgage. So there are provisions in there that maybe that spouse would continue to stay in the home.
Okay, gotcha. So like if I was potentially, I'm married to my wife, she ends up getting, maybe like the onset of dementia or Alzheimer's or something like that, and it becomes difficult for me to actually care for her and maybe continue working. Then I could potentially still live in that home, have a reverse mortgage, and also pay for her care in assisted living, maybe.
Right. Now, you would this is where planning comes in.
Gotcha. Okay. Yeah.
You would already have to have that. So another thing about it is where there's options in place, somebody can close on that reverse mortgage and not be taking any draws right away.
Gotcha.
So it's not as if they have to automatically be using.
Okay. That's interesting. So really they can close on it, set it up. It's almost like at that point in time, it's like a long-term care insurance policy that you activate it when you're ready for it, type of thing.
There's so many ways that you can use it from a planning standpoint. Yes.
Gotcha. So I get it's really like a combination of almost like maybe your estate planning lawyer, your financial planner, and a mortgage company like yourself to help put together like all the to really put together the right plan, I guess, really for someone that might be interested in that.
Right.
And so typically, I mean, like, do you find reverse mortgages to be a popular item, or do you find most people to come in just maybe with like a misinformation or just a misunderstanding of what a reverse mortgage is?
Very much a misunderstanding of what a reverse mortgage is. So it is a negative amortization loan if the borrower is not making the interest payments. So again, we go back to a forward mortgage and a reverse mortgage. If the borrower, homeowner, we call them borrowers.
Right.
If the borrower is not making any mortgage payment at all, what's happening is the interest, as it accumulates, as it's due, the interest starts to add on to the balance that's due. Everybody does have the option to make interest-only payments to keep the balance without going up. But let's just also say, but again, this is where the percentages come in. Let's say somebody is borrowing 50% of whatever they're either purchasing or the value of their home is, 50, 60%. Well, there's wiggle room in there for that interest to be accruing. And
Right.
again, they will never owe more than the home is worth. So there's never any shortfall. Let's say this COVID leads to a decline in values at
Right.
some point. You know, fingers crossed, the answer is no. My appraisals are still coming in real strong, but
Right.
you know, who knows?
Yeah.
If somebody has a reverse mortgage
Right.
and that value has come down, they don't have to worry about it.
Gotcha. So how would that work then? If like, because I mean, that's nice that they have that protection in there, you know,
Yeah.
to just to provide some reassurance. But how would that work then? If are they responsible at the end of that time to sell their home, or what is it? Okay. Okay.
No,
Gotcha.
the lender. So same thing as your forward mortgage is unless that borrower defaults in some way.
And defaulting would be like not making the interest payment, right?
Well, no, not the interest
Okay.
payment, but it could be they're not paying their taxes and insurance.
Okay, gotcha. Okay, yep.
Because they don't have to make any payment at all on the reverse mortgage. They can either allow their interest to accrue or they can pay it. It's totally their choice.
Gotcha. So it can be part of the mathematical equation at the end. Meaning it's like the interest is accruing inside of that 90% of value built into that reverse mortgage.
Yeah. So let's say again, I am just pulling numbers.
Yeah, but this is great depth for people. So yeah, it's good stuff.
Let's say they start off with a $200,000 balance.
Okay.
And 5 years, 10 years, 15 years down the road, they now have a $300,000 balance just because the interest has accrued.
Sure.
And let's say when it becomes time to sell the home, let's say at that time the home is only worth $295,000.
Right.
Again,
Right.
numbers out of the air.
Yeah.
It's done. The heirs don't owe anything extra. The borrower doesn't owe anything extra if they move out of the home and move into an assisted living residence.
Gotcha.
Done. Nobody can come after the borrower or their heirs for any shortage between what they sell for and what they owe.
Now, is that something where like, is it still a responsibility of the homeowner to sell the property?
Sure. Again, just like a regular forward mortgage. Yep. Let's say somebody passes away. Typically their heir is going to then end up selling the home.
Gotcha. Okay.
So it's just like any other mortgage where for some reason, let's just say somebody passes.
Right. So then say they sell it for more than what is owed on it. Then in that case, could they still take some of that money?
Absolutely.
In equity? Yeah. Okay. Gotcha.
Absolutely. They never owe more than they owe.
Yep.
No matter how much the home has appreciated, they never owe more than they owe, and they're never liable for a deficiency.
So this really is like a great. I mean, if people have paid into their home for 30 years, or they own it outright, or they've been living there for 15 years, and they paid a significant portion of their balance down, this really could be a great alternative to help stretch. Their. I mean, it's instead of like. I mean, it really could help someone actually pay for care in their home or pay for those additional expenses that someone might need as their medical or care needs increase.
One scenario is you have a couple, married couple that own a home, and one of them passes, the other spouse loses that Social Security income.
True. Yeah.
So all of a sudden.
Yeah. I know there's a gap, a void. Yeah.
Yes, exactly. So they go from decent cash flow to an oh my God.
Right. Yeah. And I just thought about that too, because like, even in that scenario, I mean, you could have somebody that, say it was the husband, and maybe he was the one that had the higher Social Security income, and or something like that. If that back in the day, and like now that's gone. I mean, that could be a big void for a family if there's not other income set aside or other assets set aside to help pay or make up for that loss.
So here's where a potential situation would come in, where the homeowner, let's take the scenario that you just gave. The homeowner chooses between, do I sell my home and live with my kid? And the kid's back there going, oh my God. Not bad.
Right. I'm done.
I love you, but not bad.
Yeah, we see that a lot. Yep.
Versus maybe the kids send money to help the parent that's going to stay in the home.
Sure.
Or the surviving spouse looks at getting a reverse mortgage.
Right.
That way the kids don't have to be involved. They get to stay in their home. The cash flow ends up being as much, as the calculations go, and as much as they want. There's a lot of flexibility in the programs that are chosen.
That's really cool. I mean, they have it now. Is that something? Is there only a handful or a specific number of companies that actually offer reverse mortgages, or?
It's nowhere close to when, I definitely close more forward mortgages.
Sure.
Talk about every day.
Yep.
And unfortunately, there's still a lot of bad thoughts in people's mind. I'm always surprised when I run into people that say, well, I wouldn't want a reverse mortgage because then the bank owns my home.
Right.
No more so than when you have a regular mortgage.
Right, exactly. I know. I think about the balances we owe on our, I hopefully they're not that big, here 10, 20, 15 years from now, but they're, it's like right now, I always look at it, to me, the bank still owns it. I still don't feel like I own it until it's paid off, so.
Right. So then you look at the equity in your home.
Yeah.
Let's say you get to where you've paid it off, and it's nice, especially when you've got the income rolling in and everything else. But really, what good is it doing for you?
Exactly. I think some people say it's like dead money, or it's it's sitting in the home, but it's not earning you any more money. You can't utilize it. It's kind of stuck. It's parked. It's like having a big savings account, type of thing. So.
And here's one other thing. Let's just say that the homeowner doesn't really need the money. They're not strapped. They don't need the financial plan, but they have grandchildren that they want to start paying for their college educations, or something like that. There are many reasons where they can take advantage.
Absolutely. No, it's great, just great information. I think for people, I really appreciate you taking the time to share this information with folks as well. Now, would you say are there specific mortgage firms that write or that will do the underwriting or work with folks in regards to a reverse mortgage? Or is it pretty common amongst, do you recommend going somewhere specific for someone to find
coming to me?
Right, exactly. and for those that don't know Toby, she's located in Punta Gorda. Aren't you guys in the purple building?
I'm next door to the purple. I'm in the greenhouse on Sullivan Street downtown.
Okay, so the greenhouse,
cobblestone.
Yeah, it's beautiful, by the way. It's a beautiful area. So the greenhouse on Sullivan Street in downtown Punta Gorda. Go see Toby at the mortgage firm. But I guess, in general, if someone was watching and they were not in Southwest Florida, is there how do you find someone that does this or specializes in this type of stuff?
So just from a me personal standpoint, I close anywhere in Florida or Georgia. So I cover all of Florida and Georgia for any kind of closing.
Gotcha.
Other than that, they might ask their financial planner to refer them to somebody. that they
Gotcha.
know. There's not a lot of unscrupulous ways a borrower can be had anymore. As a matter of fact, one of the changes that was made a few years ago is every borrower, including a spouse that's not part of the loan, but they're married at the time and living in the home, every borrower has to actually go through a counseling session, not with the loan officer. So I'm not the one to administer the education, the counseling on it. It has to be done by somebody else.
Gotcha.
That is certified to do that, so that we're just making sure in every way possible that the borrowers involved understand what they're doing and that nobody's going to take advantage of them. So other than me, I would say ask your financial planner.
Right.
Because I would imagine that they have somebody to refer to.
Yeah, and I'm sure if someone was talking to that person, just asking them questions about it, you're going to know if that person knows what they're talking about, or if they're if they're second guessing themselves or unsure or having to go back and kind of do some more research that they may not be as knowledgeable in that category. So I think it's great. I really appreciate you sharing. Is there anything anything else that you think is important for people to know, whether it's about reverse mortgages or just mortgages in general, about home ownership? Or
add that a lot of people end up being traumatized by the idea of picking up the phone, whether it's for a forward mortgage or a reverse mortgage, and so they sit and do nothing. I've been doing this for 33 years, and sometimes somebody doesn't get right away what they're looking for, but you make a plan and you move forward to do that. I do that with credit on a lot of people that are buying a home and want to do a regular forward mortgage.
So just educating people and just being able to say, hey, let me help you understand how this works. Let me help you plan for this.
Plan for it. Yes. Because you'd also be surprised at how many people have been traumatized to not pick up the phone, and they're awesome. They can end up saying they just were afraid to be told anything bad news. So the work that's going to happen is you're going to make a plan and you're going to understand, where you are.
Sure. I love it. It's fantastic. That's awesome. Exactly. If anyone needs to, learn about mortgages or reverse mortgages, please reach out to Toby, the mortgage firm in Punta Gorda. I really appreciate your time, Toby, and thank you for helping us understand some of these questions around the idea of a reverse mortgage. What is it? How does it work? And things like that. How do you qualify? Who could benefit from it? I think it's a great thing for someone to have in their toolbox of as people continue to go through this process of aging, whether it's their parents, whether it's their spouse, whether it's someone else in their life, being at least knowledgeable about what this is and how it could potentially help them pay for some of these medical expenses or healthcare needs, later in their life and stuff like that. So, or even, or just going to cruise.
Ships anymore right now, but
exactly. Yeah, I know.
Don't like to have the money for that.
Sure,
Chris, it was completely my pleasure, and I'm so glad y'all asked me to work with you on this.
Yeah, no, thank you so much. I really appreciate your time as well, and everyone that joined us today. Thank you so much. We'll provide links later on so you can reach out to Toby, and of course, you can follow us and reach back out to us on our YouTube channel at youtube.com/senior source. Thank you all for joining us today. Thank you, Toby Lynn from the mortgage firm. Appreciate you guys, and you all have a great day.
Bye.